Now let's start with the Indian markets because they have opened in the green on Friday's trade, bucking the weak trend that we are witnessing in the Asian market. And what's particularly more impressive is that markets are building onto those early gains. And if you look at it as of 10 a.m. this morning, both benchmark indices, Nifty and Sensex, were up about 0.5% each, with the 50-share Nifty reclaiming the 24,000 mark. Meanwhile, Sensex was up as much as 350 points. The broader markets are also participating in the rally. In fact, they have been leading the rally, but today is the day for the large caps. They are up by about 0.5%, whereas the small and the mid caps, they are trading with gains of about 0.3% to about 0.5%. The mid cap index is up 0.27% as of 10 a.m. It's near that 56,450 mark, whereas the small cap index has climbed above 18,600 levels. And to look at it, the broader markets, I mean, they have really championed the cause of this recovery that we have seen in the last 4 sessions. Because remember, yesterday we saw a big correction in the markets. Perhaps it was expiry related, but the broader markets kept the overall breadth of the markets in the favor of the bulls, and that did inspire some bit of a confidence. And I think yesterday's correction was perhaps a one-off. At least we'll keep a track on it and see and tell you about it in the evening. But 24,000, I think that becomes a key level now. It's a psychological level, it's a round number, so that could be a key for the markets. I think the first level of resistance for Nifty could come around that 24,125 mark, because that was the low point of Monday, Tuesday and Wednesday. So once we climb above that, we perhaps make a move towards 24,350. India VIX, let's talk about that. The fear gauge is also down marginally by about 0.1%. It's near that 15 mark. We were edging towards 15.5 levels, but markets and investors would certainly like to see India VIX coming down further from here on, perhaps fall below that 14 mark, but 15, it also looks digestible. Now let's move on to the sectors. I mean, it's a sea of green out there. Pharma stocks, they are leading the rally. They are up by about 1.5%. And if you look at it, in the correction that we have witnessed since October, in the one and a half months, the pharma stocks, at least if not fall, they were maintaining those gains and keeping the cap on that fall. And good to see them back in the green. They were seeing some bit of a profit booking in this 2 or 3 day run up that we were seeing. Oil and gas stocks are another sector that's up by about 0.75%, and IT stocks, I think that's noteworthy. The move that we are seeing over there this morning, the IT index is up 0.44%. Another sector that was bucking the trend of correction of the past 1.5 months. Good to see that back in the green. We would hope, because it's a big contributor to the overall market, so one would hope that the IT stocks, the correction at least that we witnessed yesterday of about 2%, was just sentimental and was because of this inflation data that came out in the US, which resulted in the fall of the US dollar as well as the bond yields, and pushed back those expectations of rate cut next year. So perhaps in the US we may see another rate cut come December, and remember, the RBI is also due to meet in December 4 to 6. So, in the absence of lack of cues, those are the big key events to track for the markets going ahead. That's it for the markets. We'll move on, and